Are you blown away by San Jose prices and worried about rising interest rates? Well, today I have a mortgage expert with me and we're going to look at the history of rates and affordability and give you some valuable information to make a decision moving forward. So today with me I have Mike Anning with Mosaic Mortgage. He's going to go over some of the historical interest rates as well as payments, and stay tuned because you're going to really be surprised the difference of payments and San Jose prices to the monthly payment. So Mike, why don't you go ahead and take it over and give us a little history of interest rates?
Yeah, of course. So dealing here in the Silicon Valley, it's a super competitive market. So we are going to give illustrations on the visuals here, which are regarding jumbo loans. So these are, of course, the larger loan amounts that are necessary for our median price here today. So median price is?
In San Jose, in January of 2022, we were at 1.55 million. So we're going to take that and work back through several Januaries over the past 5 years or so.
Correct.
And run some payments for you.
Yeah, absolutely. So I'm going to jump to my screen here and you guys will get a chance to see what the history of rates are doing, because in order to get a forecast of where things are projected to go through the remainder of 2022, we have to understand where we've been and then what happened really over the last 2 years, government stimulus to drive interest rates down, because we do know as things start to normalize, we want the world to get back to a normal place, that interest rates are going to continue to increase. So we want to make sure we can plan for those adjustments as we move along.
Yeah, so stay tuned till the end where we're going to give you a perspective of how those payments actually really changed so you get an idea of that fluctuation with interest rates. All right, let's hear about the history.
So what we're looking at here is the last 7 years, and we're going to kind of take snapshots from January rolling over each year just to kind of get a historical perspective. So again, as we're looking at the median home pricing increasing year over year, we have seen interest rates, over the last 7 years be about where they're at today. So we have interest rates increasing off of all-time historic lows. However, if we're in today's range of about 3.75 to 4% as a range, we go back 7 years, that's pretty much right on the nose of where we were at back then.
Okay.
Moving forward one more year to 16, moving 17, we start seeing interest rates, even above 4%.
Yeah.
At that time, markets are changing, median prices is starting to continue to increase, but we do see interest rates as well at 4.3. The market was still robust, and that didn't pull people out of the housing market because rates were increasing,
yep.
Right? It was still affordable, and even at that time, 4.3 in the big scheme of things, when interest rates in 2000 were approaching 8%,
yeah.
Still very favorable, of course. So moving forward to 18, we see interest rates in the mid fours. Mm-hmm. Again, this is for your normal jumbo 30-year fixed. Move forward to January of 19. So at that point, there was a period of time, November, where rates were almost 5%, right? Mm-hmm. Then we started to see a handful of things happen after the election cycle. Markets were adjusting. We started seeing some improvements in interest rates. So January, they started decreasing. January of 2020, of course, this was still pre-COVID.
Yeah.
More normalized economy across the board. But we did see, interest rates improving. And then when COVID happened, what happened?
Government control.
Everything. So we have, and I think it's really unprecedented, but the massive government stimulus really was applied across the board. And
mm-hmm.
that did, provide not only a benefit of interest rates we'll look at here, but also, small businesses were able to get capital to work because a lot of businesses were shut down. Right.
Yes.
There was a benefit of forbearance where the government was working with the banking industry to provide relief to people who lost an income but still needed, lost an income, couldn't make their house payment. So instead of starting the foreclosure process, they were able to defer those payments for a period of time. So again, this was all part of the government the government stimulus. A lot of it for the mortgage industry is they injected trillions of dollars of cash into our market. So they almost overcorrected because there really was not a reasonable purpose to expect a year later, January of 2021, that interest rates were going to be under 3%.
Yeah.
Unheard of, right? Mm-hmm. So it's one of those things where they overcorrected, they provided too much liquidity to the market. So being supply and demand, there was so much money in the markets, it became cheaper to borrow. That money is currently starting to get pulled out, from government policies. They've already talked about raising interest rates, raising the prime rates, raising the cost of funds rate. So we know that they can't continue with that stimulus forever. So they've already declared that they're going to unwind some of that stimulus, and just as we move forward, from January of 2021 to January of, let's look at December, rates were still relatively favorable, a little over 3% at that time, right? But we have seen what you'll see on the chart here, just in the last month, since January, we've seen kind of a peak of interest rates. So people we were talking to in December with a rate quote at 2.75 or 2.8 are now 1% higher.
Yeah,
right?
ouch.
Right, exactly.
So why don't we look at what those payments actually look like?
Yeah, absolutely. Perfect. So what you're seeing on the screen now is a 5-year history, January, year over year, to not only show the median sales price in Santa Clara County, but also what the prevailing interest rates were at that time. So as we look at January of 2018, median sales price was $1,060,000. Using a 20% down payment metric just across the board, the interest rate at that time was 4.125. Right?
Yep.
So, of course, we are illustrating property taxes and insurance because that's going to be a material difference for the monthly payments. But what we see here by going from the median sales price with an interest rate at 4.125, following year, a slightly higher interest rate, the median sales price actually fell that year, right? But moving across sideways year over year, even with the interest rate fluctuations, it was interesting to see that the mortgage payment in and of itself for this 3-year period was relatively constant. Yep. So even though the loan amounts had changed and the interest rates have changed, it didn't affect affordability too much because the monthly payments were very similar. The difference that we did see was property taxes year over year, right? This is going through January of 2020. Moving forward to last year, January of 2021, we see a median sales price increase, a pretty good jump at 1.25, using an interest rate at 2.875. Again, the monthly payment was relatively constant over the last 4 years, January to January, but we did see an increase of property taxes.
Yep.
Right. So we are seeing that monthly payment increase, due to property taxes, and then January 2022.
Yes.
Where are we at today? Obviously, the largest jump that we've seen in the median sales price, year over year. And the loan amount has also increased in what's required using 20% down, but the prevailing interest rate today is 1% higher than it was a year ago. So what does that mean? It means not only if you're, taking a larger loan amount, the monthly sales price difference is about $2,000 a month, not only for the larger loan amount required and the increase of interest rate, but also the increase of property taxes at this price range.
Yes, perfect. So stay tuned for the next video where we talk a little bit about the future of what we see in 2022 and talk about potential payments if the prices were to hold and interest rates go up, as well as if the prices were to soften or increase and those interest rate variabilities. We look forward to educating you a little bit more. Please comment below if you have any questions.